Hi everyone, it's Natascha from Trader Profits here, and today I want to talk to you about some of the most common struggles our traders have faced and how we've worked with them to overcome these. I will share with you some tips, tricks, tools and insights that have helped our traders transform and enhance their trading performance to achieve consistently profitable results. I've worked with some of the best traders and investment managers in the world for many years now, and through this I've had the privilege of working closely with over 10,000 traders across the globe, with traders at various levels and from all different walks of life. This has given me great insight into what a trader's journey entails and some of the most common problems all traders face when trying to hit their financial goals. Now, two key questions I get asked most is how do I stay consistent in my trading performance and how do I prevent emotions from affecting my trading decisions? To answer these questions, we'll first have to have a look at some of the underlying issues. Today we will be focusing on fear and its influence on trading. For many of you who have been following us for some time, you know that our students adhere to the 5 basic steps to trading: selection, timing, risk management, trade execution and review. In any of these stages, fear can cloud your judgment and affect your trading performance. Let's start with fear in the selection phase. So many traders refrain from entering into positions because they're dominated by their fear of losing. As humans, we're trained to strive to be right. Our entire educational systems are based on the premise that success is measured by being right. One key lesson that has been a game changer for our traders is that as a trader, it's not your job to be right, it is your job to make money. To bypass your fear, and more specifically the fear of losing or being wrong, you should find a way to bypass your ego. Now, with bypassing your ego, I don't mean conquering your ego. That is a separate debate. Bypassing your fear and taking the emotions out of trading can be done with a simple trick. This has worked wonders for some of our students. Think of yourself as the manager of your trading organization. As the manager, you're responsible for the vision, which in trading will be your strategy. Your employees will execute this strategy. Your employees in this scenario will be your stop loss, your take profit level and other risk management principles. Once a setup presents itself that meets the rules of your strategy, you implement, instruct, delegate consistently. No matter how great your strategy or how experienced a trader you are, there are and always will be variables beyond your control. There is a direct correlation between the degree to which you accept risk and how the avoidance thereof can influence your trading decisions. Risk acceptance will enable you to interpret market information without attaching the potential of emotional pain. You will be able to interpret market information more objectively. Trading, like living, inherently holds an element of uncertainty. Once you're willing to fully accept this certain uncertainty and are ready to live, lose, learn and move on if the worst case scenario occurs, you are ready to be a consistently profitable trader. A lot of traders might have the right strategy and even the discipline to implement when their setup occurs, yet don't act when their indicators line up. They wait for outside confirmation and miss the move. The other side of that coin is traders who operate from a fear of missing out mindset. They might not wait for the trade to set up and find themselves in the ripple before the wave. You don't need invaluable certainty in every trade or all the market conditions. You just need enough trust in your own trading ability and your ability to deal with a win or a loss. Winners have adopted a mindset of success. They approach every trade with discipline and focus. They remain confident and consistent regardless of the outcome of an individual trade. Risk management. Will you encounter losses? Of course. Having a winning strategy goes beyond having a proper trading strategy. A proper strategy will permit you to sometimes lose and still end in profit. If part of your strategy is to only take trades that will warrant a 3-to-1 reward to risk, then mathematically you can lose 7 out of 10 trades and still make money. This is your safety net. Trade execution. What has been extremely helpful for our students is to focus on being consistent regardless of winning or losing. Evaluate each trade objectively and individually. Either a winning or losing streak can tempt a trader to go off plan and make decisions based on emotions. Nothing trumps experience in the markets. The only way to develop proper experience is to be consistent with your approach and methodology. You no longer concentrate on the fear of winning or losing. Your sole focus is on the process rather than the outcome. Review. Trading offers unlimited possibilities and freedom to express creativity and choice without inherent outside accountability. Being honest and reviewing what could have been versus what is not only gives you the leverage on yourself to stick to your strategy and rules, but is also a great tool to trial and test your strategy. It enables you to identify patterns both in your behavior and in your technique, and it allows you to find out what works and what does not. It lays the basis for consistent trading and constant improvement. Now comes the most important question, the one I get asked most in coaching sessions and our workshops. How do I make this uncertainty manageable? There are a number of ways to do this, of which we've discussed a few. Firstly, choose the best strategy for you. Choose a strategy that suits your character, style of trading, and lifestyle. Order breeds habit. Find your own unique success formula and you'll be more likely to stick to it. No one trader trades exactly the same way, and that is a good thing. Embrace being different and your edge over everyone else. Learn how to capitalize on this edge. Secondly, identify the key conditions to implement your strategy and then focus on identifying setups that meet these conditions. It does not have to be perfect. Remember, in the midst of chaos, there's also opportunity. So if it meets the rules, feel the fear and do it anyway. Thirdly, follow traders who are on top of their game and have more experience than you. Their courage and consistency in trading volatile markets will help you navigate yourself. In our Golden Playbook membership, our traders and investment managers share exclusively what they trade, when they trade it, and why. This has been of tremendous value to our members. Learning from the best and brightest has helped them develop their trader muscle and trader instinct. Also, be rule-based. However many emotions you have before entering a trade, once you have a vested interest in a position, all reason could go out the window. You're at your most objective before you're in the trade. Once you're in it, adjusting the trade is mostly at the whim of your emotions. Manage your trade, manage your state. Lastly, review and be honest. Did I stick to my rules? If not, why not? Which trades won and which trades lost? What is the common pattern? When working with my traders, we always start the review with what should have been versus what is. And this can be pretty confrontational, seeing how sticking to your rules could have paid off. But this is great leverage for improvement to occur. The 5 steps listed above are hugely important for both the beginning and the seasoned trader. You might be surprised to know that our students who have been consistently profitable the longest, for many years, still do these basics. It allows them to view the market information more objectively and assess opportunities and act on it without the hindrance of avoidance of fear of a painful outcome. Now, it's okay to feel fear. Fear simply reminds us that we're human. But don't let fear guide you and don't stay in the state too long. Fear and doubt cost a lot of energy and have a blinding focus. More importantly, it creates a habit around decision making that will carry forward in other aspects of your life. Just remember, how you do anything is how you do everything. Just acknowledge the fear and answer with reason. You have a strategy, now get on board with it. Just keep the game plan and the end game in mind. Master peak performance strategist Tony Robbins has one key tip on how to overcome fear. Robbins does not engage in internal debate too long. He goes back to his bigger picture and goes with the option that aligns with that. Come rain or sunshine, Robbins will follow through on this decision and give it no further energy. To help you trade with the bigger picture in mind, we have a very special gift for you. Check out our website traderprofits.com and get free instant access to our Trader Profits Trading as a Business ebook, detailing everything you need to start trading like a business and reaping those consistent rewards. Make sure you visit our website for your free gift, and I'll see you next week.